Welcome to the DeFinity Market Strategy. I'm Paul Rodriguez of ThinkTrading.com, and I'm joined with Manu Choudhary, who's the CEO of Diem and the co-founder of DeFinity. How are you, Manu?
Hey, Paul, not too bad. How are things with you?
Very good, thank you. So, interesting week again in crypto. It seems to be the Indian government looking to tax at 30%. Is that right?
Yes, they are. So after a lot of capitulation, after banning crypto, then unbanning crypto, then making all sorts of strange rationales and arguments for why crypto is bad, they've decided to actually say crypto's okay, but there's going to be a sales tax of 30%. I presume this is a capital gains tax, but it's not clear. You know, they haven't actually described exactly what this is, rather than a sales tax.
Right.
Because otherwise the frictional cost of actually trading will be insane. So I think it must be some kind of capital gains tax rather than actual sales tax. But it's a positive move. You know, India's got a reasonably crypto literate population, and again, you know, there's a lot of startups based there, and there's a lot of latent demand. So I think this is a great move. I think this is probably the right thing to do. It's definitely a better step forward for mass adoption than certainly the Chinese have taken. And at the same time, they're taking the opportunity to launch or talk about launching their own central bank digital currency.
Right.
Again, you know, which is a positive step forward. The only issue, of course, is that no one really wants to hold the rupee in India. None, you know, a digital version of the rupee is it going to be adopted? Well, only if they make people use it, I suppose. But again, I don't think you're going to have people jumping up and down around the world going, "Oh my goodness, I can now have a digital rupee." Yeah, so what? It doesn't really do anything, I don't think. But the change in attitude, the change in stance is actually quite good, and the fact they've actually come out and given some degree of clarity, because you had basically the central government saying one thing, you had the RBI saying something completely different. But then again, having said that, I mean, that's not that similar to last week's comments from the Russian central bank and then Vladimir Putin and the Ministry of Finance. So yeah, maybe it's just this region, you have some odd ways of getting messages out to the public. I don't know, but no, I think on the whole it's a very positive thing. Didn't really have much of a reaction in the markets. You know, I was expecting a push towards and above 40k in Bitcoin. Didn't really see that. We kind of got to 39 and a bit, then we corrected a little bit lower. So look, I think, you know, we're kind of still sideways to higher. I think I'd like to see this really begin to break above 40k if we're going to see the beginning of another potential rally. Otherwise, you know, I think it may just consolidate for quite a bit longer, which is not great, but you know, not the end of the world.
Yeah, absolutely. Any other news?
Yeah, so interesting news. So basically, there was a Metaverse ETF launched last week, and it was launched by a hedge fund called Subversive Capital Advisors. What a great name! And its ticker was Punk, I guess in homage to CryptoPunks.
Cool.
Anyway, they were long of a lot of Metaverse stocks. The one stock they took a short position on was
Facebook. Oh man.
Yeah, which obviously, given what happened in the last 24 hours, has paid off pretty bloody well. So look, I'll take my hat off to those guys. Great move. And the reason they said this, they were very vocal about it. They just said, look, do we want someone like Mark Zuckerberg to be running his version of the Metaverse? Or do we want to have a free Metaverse where you don't have people like him dictating terms? And it seems the answer is people want a free Metaverse. So it's interesting we've seen this decline in Facebook. And is it really that surprising that they're forecasting a decline in users? I don't think it is. I think it was, if anything, I think this is massively overdue, but I think this is the beginning of a large shift in how people use that platform.
Absolutely. I think the writing's been on the wall with regards to users for a long time. And I know that they've got to encourage the younger kids to get on board because it's seen as basically an uncool platform that sort of adults are on. The kids don't want to be on it. So their strategy of moving into the metaverse was possibly a good one, but you make a good point. You know, you want a free metaverse. This is the whole point of these digital currencies in the first place, and the whole ethos of cryptocurrency. It's got to be decentralized.
Yeah, absolutely. And you know, ironically, a lot of the pushback we're seeing from central governments about crypto and stablecoins in particular, a lot of this was actually started with Facebook's Libra, which then changed to Diem, and
yes,
that has now finally been put to rest. It is gone. It is buried. It is never happening.
That really surprised me. I really thought that they would bring that out, and it seemed like a no-brainer that at least one of the big tech companies would come out with their own, because it would be it would have huge backing, you know, in terms of its credibility. and it just never happened. It's very strange.
I think it was because it really troubled governments, because what they were essentially proposing was essentially a stable coin that was made of a basket of fiat currencies. So a bit like, the Singapore dollar is made of a basket of Aussie dollar, US dollar, sterling, yen, which they don't disclose. And you could work it out if you have enough time in your hands. It was a bit like that. So it was a bloody awesome idea, really smart idea. But then, of course, when you look at the number of users that Facebook has, and you look at the potential impact this could have to the control that governments have, I can see why they responded and thought, this is not good for us.
Yeah.
This is not good for the extortion racket we're running. We must shut it down, which is what they did.
Yes, absolutely. When you put it in those terms, it does make much more sense.
Absolutely. And then the other thing, which is not so good, is we saw another hack on Wednesday this week. So the Wormhole bridge, which basically is a cross-asset bridge between Solana, Ethereum, and a whole bunch of other layer 1 third generation blockchains, was hacked. I think the hack is still about $320 million from the hack by exploiting smart contract weakness.
Oh, wow.
Which is not good. But the team at Wormhole have decided to say to the hackers, you've stolen $320 million. We'll pay you $10 million if you give it back to us.
Right. Okay. Interesting.
I like the negotiation style. I mean, I think that's great. But I think what they mean is that they won't freeze the assets if they give them the assets back, but they'll pay them $10 million if they disclose the weakness that was found.
Yeah. From what I've heard, I mean, I don't know, but I think sometimes the hackers do it just for the hell of it. And it isn't actually the money, even though there is quite a lot of it. So maybe they're just pleading to that side of their conscience. But yeah, it's definitely an interesting tactic. So we shall see. No, I didn't know about that. That's an interesting thing to know.
Yeah, I mean, it didn't really have any impact on Solana or Ethereum, because it was obviously the Wormhole bridge itself and the Wormhole community that clearly lost out on the 120,000 ETH that was stolen.
Right.
But that's quite a big dent in their pocket.
Yeah. So it hasn't. Yeah. So the markets haven't really reacted that much to that. So that's a good thing.
Not really. No.
Yeah. So was there anything else that you were focusing on?
No, that was it. Really, it was a bit of a quiet market. We've seen a lot of inside days really the last couple of days.
Yes, indeed. Well, I think we do need. I'll go over to the markets if that's okay with you. Over to the charts, and I think we do actually need a bit of a consolidation in everything. And the volatility in Bitcoin and all the majors have been off the charts. So a little bit of a sideways range, a bit of a quieter range is not such a bad thing. But I wanted to just focus on a few things before we actually get to the cryptocurrencies. And the first thing was I put in the weekly that we were looking at the move up in the NASDAQ. And we were literally at this crossroads. As I keep saying, it seems to be every time I write the research, we're right on a crossroads of some kind on a Thursday. It seems to work perfectly. And if this had gone up, then it would have indicated a much better correction. This correction would have been over, and then we could have possibly started talking about consolidation and move back up. But it came straight off and went back down again. You mentioned Facebook, which clearly is one of the bigger components that's pushed this down. And if we look through some of the major stocks, which I like to see just to see how investors are thinking, we've got Apple, which is doing very well, Amazon, which has collapsed, and this looks like it's going for another down leg. Google, which has been very volatile, it sort of broke down, hit its 200-day moving average, went into a new high and then's come off again. That's really unusual price action, but I think that's going to come back down again. Netflix, we talked about Netflix before this big move. At the end of the pandemic there's a lot of competition, but from a technical point of view, it was looking negative. Facebook, very similar chart. I mean, everything seems to just be gapping to the downside. So this is not a good sign, definitely in the short term. Now, whether this is partly being driven by the move up in rates, it is to be seen. But very importantly, we've got this 10-year yield consolidation. This is a small triangular constriction, which is usually a pause before a really sharp move to the upside. So despite the fact that equities have been coming off and there has been a bit of a jump up in volatility in the VIX and everything else, this has not retraced at all. It looks pretty firm to me. So I think this is going to have a go at this 1.954% level, which is huge resistance. If we go back, it's massive resistance here. And if it takes that out, we're going to be going to 2.5% pretty quickly. Now, on top of that, the German bond market has had a huge move. Now, I've been talking about the German bond market sort of many times, and so that's the long bond. Let's just go to the German bond market. So if you remember in the weekly, and there wasn't space this week, but we have been talking about this being a massive topping pattern, and this 169.04 being a huge level that on this occasion we were expecting it to break, and it has done very aggressively. We were looking for 166 as an initial target, but look how quickly that's gone to the downside. It's absolutely fallen out of bed, which is exactly what we expected it to happen because of this, the size of this reversal. So yields are screaming back up. Now, the dollar should follow through again to move to the upside. It broke out, nearly hit our targets, come all the way back down again, and it was sitting on support during the weekly, which it seems to have broken, and this trend line, which is a bit of a shame because that was a really good level and it was rallying from it. But as long as it stays above this trend line, I'm still going to go for the bullish strategy, and I think it may mirror a move back up in the 10-year yield. So all the other yields are starting to move up, so there's a bit of a push me pull you scenario going on. So the euro's rallied, so that's pushed the dollar index down, which is why this has moved in this way. But I think this is going to go back up again and trade back towards this this 97 level, which is our Fibonacci target. Now, if it takes that out, obviously there's more to go, possibly to 100, but we'll cross that bridge when we come to it. Now, whilst all this is going on, what's been happening in the cryptocurrencies? Well, they've been relatively quiet, as you said, Manu, and I think it's absolutely right that if we can take out this 40,000 level, which for me it's at 39,576. I know I'm sort of being a bit picky about the level, but there's so much good resistance there. It stopped it here, and it stopped it here again on the way down, and it stopped again just close to it. So it hasn't quite achieved a decent breakout, which is what we need for this to push it into a new short-term trend. So this is still a consolidation. It's a decent bounce from the low. There's a peg in the ground to say, look, this is some good buying has been happening. So that's phase one. We need stability and then a breakthrough, this 39,576, 40,000 would be great. Then 42,000 is the next level. If you can take both of those levels out, this resistance line would go. And also this resistance line, which has been in effect since the 69,000 high. So we've always said that it needs to break this as a minimum for it to be bullish. But, I've been trying to catch a low because I think this is more a retracement than a new trend. Now, I could be wrong. But we shall see. But our core strategy is at the moment is that this is a corrective phase, and it will consolidate and then move into an upward trend, and it will possibly do that over the coming weeks. So the first week we need consolidation, which is what's happening. Into next week, we would expect to see a break of this 39,576. As the next signal. Now, it may bounce around here, go sideways for a bit. That's absolutely fine. What we don't want it to do is to break this low. So if it takes out or starts to approach 34,000, we're going to be on alert for a bigger correction, a much bigger correction. I don't think that's on the cards. I genuinely think that this is going to have a bounce from here, but we could be wrong. If you look at the chart of Ethereum, it does look much more bullish than Bitcoin, which is a good sign. So this is kind of leading the way up again, which is exactly what we want. But this overhead resistance is massive. It's 29.51. So this level here at 29.51, if it can take that out, that's where the old trend line was, and its key resistance as well. So if it can get through that, it would look much better. But these bases usually take a little while to form. The move downwards very sharp, and then the market's a bit shell shocked, so it goes sideways for a bit. We can't discount, I think I was saying it last week, we wouldn't discount a move back downwards again where people start to bail out and worry, and then it goes back up again. And that's what forms a technical double bottom formation, which is usually a good sign for a market to move back up again. So steady as she goes, it seems to be this week. So any final thoughts from you, Manu?
The only other final thought I was going to mention was if you remember the news last week that the Jim Kelly went to see Tayyip Erdogan in Turkey, I
Yes.
wasn't quite sure what that was about. It became slightly clearer this week.
Oh, right.
So it seems the IMF is strongly recommending that El Salvador reconsider making Bitcoin legal tender because they're coming up to the refinance of the $1.3 billion loan from the IMF, interestingly.
Oh, right.
Maybe the language is slightly stronger though, I'm not entirely sure, but it's very interesting that the IMF are getting so concerned about this shift, and very concerned, I think, about the meeting that was had with Turkey last week. So what this means to the market, I'm not entirely sure, but it will be interesting to see how it plays out, because one thing that is quite interesting about this is that if we do see the volcano mining begin to start in the next couple of months, that's going to generate somewhere in the region of 500 to 600 million of profit every single year. So that 1.3 billion of asset and liability with the IMF would be reduced pretty damn quickly.
Yeah, I mean,
perhaps that's the issue. Maybe they lose their control of El Salvador. I don't know.
it doesn't sound like a lot of money in the big scheme of things. So it sounds like the sort of amount that they could just get some other form of loan and just pay it off and have done with it.
I mean, it is quite a small country. I think that their GDP is like 25 billion or something. It's not huge. So as a percentage, that's probably a reasonably large number.
Yeah, fair enough. Yeah. Well, that's fascinating. Thank you so much, Manu. And thank you so much for watching. And we'll catch you next time.